It is after hours on Tuesday, June 27, 2017. Account value is 123K and a little something. Today we closed our position in LabVIEW. We bought yesterday 1750 shares at 69.05. Today we closed it at 69.95 for some $1,500 of profit. And then we bought Dust 4,070 shares at 30.07. Interesting price action today. And let's start with LabVIEW, the leveraged ETF on XBI on biotech. We bought LabVIEW yesterday here around 69.05. Today we closed it here at 69.95 there. We missed the peak here, but also we got out before the tankage happened when the news broke that the bill was delayed. It wasn't just biotech that showed weakness. We saw it across the board. This is the Nasdaq 100, and we talked about this 57.80 level here for days. Today we lost it, and then another 100 points into the close. So pretty weak day for tech. And if we look at the stocks, the semiconductors, even worse over there. We totally broke out of the range. In the Nasdaq 100, we are right at the bottom of the range. Here we broke down already. Not a good sign. So I am not sure if buying the dip will be the right thing to do this time around. And if we pull up the S&P future, we are also at the bottom of the range. Is this going to hold? I am not sure. I much rather wait another day for the market to tell us if it wants to bounce here. But it's too early to determine. My gut feeling is we go lower, but that might change in a heartbeat. It depends on the overnight action. And I believe it is not just the healthcare bill that caused this sell-off. To me, it was significant that Mario Draghi, Super Mario, the president of the ECB in Europe, that he declared victory over deflation. I believe that is a big deal because it's the first hint that the ECB is ready to put the foot off the gas. The question is, how will the market react to the ECB raising interest rates or to announcing taper, or will the market even front run the actions of the ECB, which is the most likely outcome? And that can be a game changer because of the artificially low interest rates in Europe. There was huge demand for US treasuries, which kept our yields artificially low. If now the market front runs the ECB raising interest rates in Europe, the same will happen here in the States because of the differential between European yields and US yields. This can have major implications. We have to see if the market is strong enough to withstand that. But the sector that is most likely going to be impacted is probably gold. I pulled up gold futures here on the left, up by $2.20, and GDX down by 1.33%. Relative weakness in miners here. And if we see follow through on gold here, I believe gold miners will break below 22 and probably go to 21, 21 and a half, somewhere here. To get across that relative weakness in miners versus gold today, I changed the left chart here to GLD to keep the time frames consistent. And if we then look what happened in GDX today or the last 2 days relative to gold, gold was still $10 higher than it was like a couple of days ago. But miners retraced the entire move and pretty much closed at those lows. And that relative weakness in combination with the news out of Europe that the ECB might turn hawkish next, I believe is a game changer, or could potentially be a game changer for gold. And that is why I like the risk reward being long Dust overnight. What I like about this trade is that we will get our reality check pretty much instantly, because if the thesis is correct that GDXJ showed weakness today as a consequence of the comments that Draghi made in Europe, if that is true, then there is no reason for GDXJ or GDX to go up tomorrow. Obviously, there could always be a spike in gold because of a geopolitical event, and that would be a different scenario. But if we don't have any of that overnight, there is no reason for GDX to be up tomorrow. In other words, I want to see follow through tomorrow, and if I don't get it, I will exit the position. Before I pulled the trigger on dust, there were multiple trades that I took a look at, and one of them was obviously Tesla. But I did not like how that one acted either. It sliced right through that 370 level. It didn't even spend much time there, and now it is not viable until we get to 357, 358 maybe. But I am not even sure if I would buy it there, because the overall market, it kind of looks dicey to me. I'd much rather be long dust and wait a couple of days and see what the market is trying to tell us if it wants to bounce here. I was even thinking about buying UVXY, which I know is the most dangerous vehicle out there, but if timed correctly, it can yield nice returns. But for that, the contango between the VIX, the front month VIX future and the second was too high, was 5.5%. If that was narrower, I might have actually done it, but not at the bottom of the range. I'm not sure if I'm still making sense. I'm getting a little bit into a rampage here, but one thing was for sure, I was not going to buy any dip today. If anything, I would have bought something that was an inverse of something that would go up if price goes down. Price action was not good across the board. I did not see anything that looked good. So we have to see how that pans out tomorrow, and then I will be back with another recap.